Let's jump into things. Bit of the weekend wrap. Where are we at? It is 11:38 on 26th of April. So getting these things done a little bit earlier on the weekend's always a little bit better. Get out of the way, and I just thought I would change it up a bit this time as well, and probably start off with the news. I mean, it kind of makes sense, doesn't it? Sort of like looking at the charts and then sort of thinking, okay, these are the levels, all this kind of stuff. Yeah, better to sort of think, okay, with these bits of news and data coming out, well, this could be affected. I mean, look, it's a weekend review, so markets are obviously closed at the moment. So you're aware of all these sort of things sort of prior to the market opening anyway, whether you do this at the start or the end of the analysis. But yeah, I just thought I'd sort of change it up here a little bit. So look, we can sort of start off on that. We can see Monday dead as a doornail all the way through, nothing through any of the sessions. That's fine. You've got elections happening with Canada. Don't think it's going to impact anything that was sort of trading. I had heard that they are sort of leaning a little bit more to the sort of left-leaning guy. I couldn't tell you who's running for what. I don't really care. Um, but certainly, I think this is, a chance for them to sort of show which way that the country's kind of leaning a little bit more because, they had that Trudeau dude in for so long, and I think he was just renowned as just being absolutely sort of woeful, pathetic. So anyway, we'll see how that goes. As I said, that's really sort of back burner kind of stuff for myself anyway. Bank holiday in Japan. Do they tell us what it is? Not that it's really sort of super important. Low liquidity, yada yada. Being for shower. I'm gonna say that's shower day. I'm not quite sure. Anyway, moving along. Tuesday, we do not have anything that's sort of really jumping out at us. You got some sort of RBA dude speaking. Again, I don't think that's really going to move the market a great deal. Like, you see these people sort of pop up every now and then. It's like, okay, pretend to be like, then it's not quite the same. Well, it's not the same at all as when you get some of these Fed speakers talking. When you get these Fed speakers talking, who seem to be, there always seems to be this guy, that guy, and then, they can be things that can move the market. Generally, they're knee-jerk reactions. They'll say one little headline and that, and then the market will go, oh my God, it'll fly up, and then it reverts back a couple of minutes later. It's not really something that's going to make or break the markets, certainly not. So moving along, Tuesday night, kind of, I guess technically Wednesday morning there, we got jolts because obviously, this is first week of the month. Actually, no, sorry, what am I talking about? Jolts isn't sort of first week of the month, that's ADP and NFP. So we'll get to that. But look, jolts, opening job openings. Seeing a slight little tick down, but nothing too major from the US over there. It's been fairly mixed more recently. It's been hovering around this sort of mid 7 million kind of area and that. So, look, I don't think this is going to be a big sort of mover. It's typically not sort of something that really reacts and holds the market. Again, it's one of these things you may see a little bit of a reaction off it if the number's a bit outside, either sort of drastically higher, drastically lower. If it comes in expectations, I'm not really expecting a great deal in terms of sort of movement just off that bit of data. But again, all these things, they're all little pieces of the puzzle that get put together to sort of get an idea about, kind of what, central bank, but in this case, the Fed, are going to be sort of doing. And obviously, sort of like, a stronger economy, more job openings, you got to play these things out. It's sort of like, why would there be more job openings now? Well, that's because people are sort of probably a little bit more confident. They sort of want to expand a little bit more and you take on jobs. Again, you're not sort of advertising for a whole heap of jobs when you're worried about whether you're going to be able to pay the payroll or whatever, to pay the wages for the next month. So seeing this as a slight tick down is obviously in that sort of more negative direction. So should this come in around expectations, I don't think that's a great deal of a drop off from that. But again, if you get a larger thing, so say this comes in closer to 7 million or it comes in closer to 8 million, those kind of movements, I think sort of plus or minus are going to be sort of what will sort of maybe give US dollar a little bit of a kick one way or the other. Obviously sort of lower, weaker for the US dollar, stronger, sort of higher number, more job openings, stronger for the US dollar. At the same time, you've got this consumer confidence. and that's looking to sort of tick down. I mean, I think sort of still everybody's a little bit sort of shocked with things. I don't think, everyone's, as much as sort of like we've seen these big bounces across the market, I don't think people really expect everything's a-okay. The trade war stuff is still sort of going on, and there's still that sort of thing of the uncertainty and also the tariffs. I mean, end of the day, look, they sort of say, hey, look, it's a short-term bit of pain and it's going to be greater and everyone's going to be richer for it. That's great. So maybe it is something along those lines of a bit of sort of like deal with the pain now, and it will. I say we, but I'm not in the US, but it will be better for them afterwards and that. But at the time, as of this point, I think the uncertainty is what is shaking confidence in that. So a little bit of a sort of odd, sorry, not odd sort of thing, because we were seeing a little bit of a drop down in expectations of job openings and consumer confidence. So it's kind of both working in that kind of, okay, let's hold off a little bit, kind of sort of data, expectations of the data here. So, you're not sort of seeing, like, as I said, if there's less jobs opening, well, that's because people are sort of, okay, let's maybe work with what we've got at the moment. And obviously, why would that be? Because confidence is expected to be down. So those two sort of flow in line with each other. Moving along there, got a bit of Japanese data. Look, I don't really pay a close deal of attention to the yen's sort of data, the BOJ. But I mean, look, end of the day, retail sales, that's a fairly substantial tick up expected here. And then you're sort of saying this is already revised. Interesting. A bit of a slowdown in industrial production. Again, they're not really sort of bits of data that I'm paying attention to. What I will be paying attention to is CPI coming out here, and we also have a quarterly number here. So we're seeing a quarterly number here as a little bit of a sort of increase in that, which is quite interesting. The yearly, right in that kind of, I'd say in the band. It's not at target. Target's 2%. I mean, they did sort of fudge those kind of sort of targets for a while and sort of say that, um, 2 to 3% is acceptable. That's when things were like up at 6 and 7%. They kind of sort of gave a sort of target that they sort of think is probably a little bit more achievable and manageable. 2 to 3% opposed to sort of it's got to be 2%. Now that we're sort of in that 2 to 3%, I think they can really sort of start to hunker down and say, hey, look, it's still a little bit too high. We want to get it lower because 2% is the healthy growth expectation and has been for a long time. So it's still sort of hovering around, but certainly, definitely compared to where we were, it's not so much of a sort of prevalent issue anymore. So you got sort of things, well, they call it the dual mandate and that, and one of those is CPI. So they want to make sure that inflation's not running out of control. So if this is sort of back down in that sort of realm over there, it's a tick in the camp of like, hey, it opens the door for cuts. Um, Everything that you look at the moment is sort of, well, everything you look at, the news, the mainstream media, these sort of people, without sounding like a tinfoil hat person. But look, everything that they say at the moment, they say that the market's pricing in I think, 4 cuts till the end of the year, which is pretty hectic, and certainly going to weigh on Aussie. So, they're saying pretty much it's a lot of the sort of bank heads are sort of coming out and sort of saying that um, this next meeting is pretty much a sure thing, done and dusted. It's a cut. I don't know. I'm always a little bit sort of iffy about these sort of things, but if that's what the market's sort of spruiking and they're talking about that, it's going to weigh on the Aussie. And so how we use this sort of bit of data here is if the CPI continues to stay low, that's a big tick in the camp of, okay, yep, they could open the door for the cuts. The quarter on quarter, that sort of ticking up, that's probably sort of a bit more of a sort of, well, they obviously sort of like you've got quarter on quarter CPI moving up, you've got yearly sort of moving down. So it means short term, we're probably expecting a little bit of a rise. Maybe people are going to sort of chalk this up to tariff kind of stuff and that. We'll sort of see how that goes. I don't know if it's, when did the tariffs come in? I suppose in this last quarter, I'd have to sort of look into whether that sort of that will be showing up in this kind of data, but that could be explaining this little temporary sort of spike up should the tariff period be included in this sort of period here. So does this give us a date? No, no. Okay, that's something I'll look into there. But CPI year on year still moving in that sort of coming down direction. The trimmed mean, which is obviously just basket of goods minus. I think they take out maybe fuel. They take out a couple of bits of other pieces. I don't know if fuel's actually in that, is it? Anyway, whatever. That's obviously looking to tick up there as well a little bit. So in the short, headline number is the year on year that they look at. They will sort of take into account these kind of ones. The quarterly ones, if you remember last year, Bullock was saying that she wanted to see a couple of those ones down in their target. So that's obviously come down drastically. If we look at sort of, I suppose 1.2 from last year. So it's come down a little bit there, but actually it got down to 0.2. So yeah, it has come down drastically. But yeah, the one that the market sort of really sort of seems to sort of tout on is the yearly one. So we get a low number here. It'll be a tick in the camp for more cuts and weaker, and will sort of weigh on the Aussie. Obviously, if it moves up, if it's higher, you'll probably see Aussie strengthen up a little bit, because as much as all these people sort of love to sort of say it's a sure thing, it's guaranteed, it isn't. Nothing is. And when you see these people sort of put all their money on these sort of things and go, yeah, yeah, it's definitely, that's when there's some good opportunity on the other side of it all. So we'll have to sort of see how this plays out. But look, I would say this probably is going to come in low twos. I mean, that's not really based on anything that I've done or looked at and that with it all, but just general feel of it all. I don't think we're going to be sort of coming down into our sort of 2% targets. But certainly, if it comes in at 2.3%, I think that's going to weigh on the Aussie a little bit. And Aussie, very interesting. I'll get to the charts obviously in a moment. But that is really sort of struggling at the moment. So that needs some sort of reason and a kicker to sort of get back up above there. So I'll get to Aussie, but yeah, so we're looking for a slowdown. Slowing, a slight cooler number with the CPI there. Moving along, we've got, at the same time, we also have PMIs out of China. China, obviously, also another big sort of factor in sort of Aussie sort of movement. So we're seeing very minor tick down in non-manufacturing. So I guess that'd be services over there. I have to check. I had a feeling they came out separately. But manufacturing, also slight little tick down. One of these ones where 50 is the benchmark for sort of like contraction and expansion. So looking like a little bit of a cooling down over there. So again, these sort of things, if this comes in cooler, it's probably going to weigh on the Aussie a little bit as well, because Aussie's obviously very touchy when it comes to sort of China and what they're doing. So if they're doing better, it's going to flow onto the Aussie as well. We really are. Aussie is really at the tail end of all this sort of stuff. It's and this is why when I do those sort of like three little arrows to sort of do a little health check, heat check, or whatever you want to call it, of where Aussie's at. The three things I look at are USD, China, and then obviously RBA being the smaller part of those three. Because we can have data that says, yes, okay, we're all good and we're going up or whatever. And then if we get sort of counter sense sort of data out of China or the US, well, all of a sudden our little CPI figure doesn't matter so much. So we really if you're trading Aussie, you got to accept that there's other factors other than the RBA, of course, but the other factors are a lot larger and a lot more influential than the RBA data is. All right, moving along, we got a bit more sort of China data coming out over there as well. So manufacturing, Jackson, okay, I don't have to look in the difference of these ones here, but again, in that same direction of a little bit of a cooling. All right, move along. Got GDP. None of this stuff really doesn't really interest me so much. Moving along, we've got GDP quarter on quarter from the US, looking like, okay, it was revised up, but looking like a big slowdown there on the advanced GDP, and GDP we don't, month on month, we don't have a number for there yet, so I'll get to, oh, sorry, that's Canada. With the US, yeah, a little bit of a cooling off. Sort of expected through here. I'll sort of cover this as we get a little bit closer to it. It's not really a big bit of data that I sort of pay super close attention to. Core PCE, again, a little bit of a slowing down here as well. So with these sort of bits of data that we're looking for with the US at the moment, US is, or DXY, is really, it's trying to rally. It's trying to find itself a little bit of a base. So from a technical standpoint, it's got some nice levels where it could sort of break and squeeze out some shorts. But it's not just a thing to have, okay, yep, here's a technical setup. Obviously, the technical setup can say, okay, yeah, you can see where the flows are going. That's what you use the technicals for, to sort of identify where the flow of the market, capital is going in the market. But you need the reason, you need the catalyst. And obviously the headlines have been the big thing for, the last couple of weeks, month or so. But the data still needs to point in a reason for people to buy it. It could look like the technical reason, okay, yes, it's oversold, and yes, it's a head and shoulders setting up and all this kind of stuff. That's fine, but you need the data to support it, and you need some strong US data to really make people sort of think, you know what, maybe we've sold the US a little bit short here, and maybe it's a little bit lower than it should be at the moment. So if you can get some strong US data, this is not it. But if you can get some strong US data, maybe if you get that sort of like GDP a little bit higher, you know what I mean, and you get that sort of core PCE probably a little bit higher, you can say, okay, maybe that's a reason, okay, yep, let's buy it. But again, this is not looking like strong US data. So this doesn't support the idea from a fundamental basis of US dollar sort of breaking out, or DXY breaking out from its lows at the moment. Move along. We got BOJ looking to hold. They always talk the talk about they're going to be sort of raising, but they get a little bit gun shy the closer they sort of get to it all. Thursday we got a couple of more Europe sort of bank holidays. Aussies had a whole heap of holidays recently, and now we're seeing a couple more across Europe. Not quite sure what it is. Obviously, it's probably the same thing. What is it? Okay, interesting. I don't actually know this, so we'll see how this one goes. Anyway, ticking along, commodity prices, no expectation here. Uh, Still obviously negative, but moving up, kind of thing. Unemployment claims, as I say, this pretty much comes out sort of very, very flat most weeks. It's in about a sort of 10,000 sort of number range. Till you get a sort of big spike one way or the other. That's not going to affect things too much. Kicking on, we've got ISM manufacturing. Um, 2 seconds. So we've got NFP. Let's skip over. Ah, I did. Yeah, skipped over ADP. I was going to say because we got NFP this week, so we got ADP back here as well. So again, look, slight little slowdown expected with this. So this is obviously sort of jobs added in the private sector with it all. Again, not a strong US bit of data expected here. It's another tick in making things a little bit harder for the US to be bought up at the moment. Manufacturing ISP, again, slowdown here. So, yeah, it's not looking great for the US data at the moment. Retail sales in Aussie, and we've got a bank holiday in China for what it's worth. Retail sales, slight little tick up month on month there. Again, it's not, retail sales can move the market a little bit more from the US. From the Aussie, it doesn't really have a great substantial effect, maybe a little knee-jerk reaction. And realistically, that's, not a massive jump up kind of thing. If this comes in at like, say, 1% or something, then look at, whoa, what people are out there spending. And the idea with that is if they're spending, well, they've got enough money to sort of go out and buy all this sort of stuff. Maybe they don't need their rate cuts. So that'll be obviously, if you play that out in the idea that, it would be the reasoning that the RBA could hold the rates for a little bit more, which is obviously a tick in strength for the Aussie. So if this comes in higher, this will be a little bit of a sort of a reason for Aussie to be bought up a little bit. Moving along, and then, yes, as I said, NFP coming in. And again, loving the fact of this time of the year where we have the times line up and it's not 12:30, 10:30, because it's a little bit rough. I mean, Friday night, come on, you want to finish up for the week, and you got one of the biggest sort of bits of data. So I call NFP and CPI kind of like second tier data only behind FOMC. Numbers quite low though. Actually, very low. Sorry, I thought I read this as a one. Expecting quite a steep sort of drop off there, and 129 is quite a low number, particularly if you look at sort of where we've been at recently. Look, the low ends of this 143, 151, 200s, 200s, 200s. It's a bit of a shock boomer last month. So it'd be interesting to see if they can sort of duplicate that. But again, same sort of thing. Sharp should drop down. And if we actually sort of, okay, take out the fact that they got this drastically wrong and they were expecting 130, 150, 160s, these kind of things through here, it's certainly forecast. You can see it sort of moving down all the way through. So, if you look at just the forecasts, not that that means anything, certainly doesn't mean anything with the Aussie because they have no idea what's going on with it all. Their expectations are that it's going to be slowing down and continued slowing. They've got it wrong a couple of most of these times and that, but if you actually look at what actually happened, actually strengthened, big drop off, stayed flat, spike up. So, it's not really too much to take away from sort of like the actual figures against the forecast. The forecast is obviously that they're expecting it to slow down each time. We had a spike up, could be a sort of outlier here, but obviously it looks like a big sort of drop off. When you look at 228 down to 129, that seems like, whoa, geez, something drastic's happening. But, they're only expecting 137. And also, if you look at the prior month, 151 was the reported number. So 228 is this reported number. This got revised back 40,000. So maybe this gets revised back 40,000-ish. We'll see how that sort of goes well. But, sort of, again, 43 back to 25, 256 up to 307. So interesting. But look, end of the day, if you get a low number through here, again, it's something's going to be going to be sort of weighing on US dollar. So as a whole, US data does not look like they're expecting this thing to sort of break out. Be interesting as we take it into the charts. All right, so onto the charts, the things that we want to see. So look, we'll start off with gold. This thing has been working hard to sort of get down here, and as we can see, it's really trying to sort of almost tried to break down, but a bit of a rally back up into close there. So interesting, sort of not interesting, but quite a strong sort of rally. So this was the little, if you want to call it a double top through here. It was kind of like the bear flag that I was sort of playing on Friday. And we got quite a nice sort of sell down. So we did quite well, I did quite well with the short side moves down through here. And I thought, look, we'll see how we go. I thought this thing could break down, but coming into the end of the week, it always makes it a little bit difficult because, with so much uncertainty in the market at the moment, do people want to hold things over the weekend? I mean, that's 48 hours of no ability to sort of like hedge or cover yourself or get out of things. So, we saw that big drop down. Where was it? Through the week. This big gap down here, admittedly, came back up here and closed it. If you hadn't, so I was actually short through here. I woke up, it was down here, and I'm like, bang, lock that in. And this is why, in my opinion, from my opinion, my style, you know what I mean? I miss sometimes the big runs. I mean, I was short from like, I don't know, up around here as well, but then out here, short here, out here, like, you know what I mean? I missed the big run, and had you sort of been short here and done nothing, well, good on you, you'd be massively ahead. But, as I said, like, for instance, with this area here, I shorted through here, banked out here, and then I started shorting back down through here again. Banked around these points over here, started shorting here, started shorting here. So, you make up the difference with the fact that you don't get the super long run. But again, you in, out, in, out, in, out, in, out, in, out. And for me, that just works a lot better. It's a lot less stress than sort of trying to sort of get these big home run things. And honestly, maybe a little bit tinfoil hat, but I think that's half the reason the market is um, positioned the way it is because I think sort of a lot of people, they read these textbooks, see these videos, and they think, oh yeah, I'm going to buy this and trail my stops and do all this kind of stuff. It's very tough. It is honestly very, very tough to do this mentally and that, and financially as well. If you're trying to sort of like cover yourself, and you're trying to sort of live off this, that people sort of like, they get stopped out, get stopped out. Well, people got to pay their bills, so it's all very well that you're going to capture this one big move, but most likely you're going to get burnt out mentally and financially before the move even plays out. And if you do happen to catch it, well, you're lucky. But as a good example, this was the silver trade. Where was it? Up over here, shorted from here. Had you done nothing and held, well, that's great. You're out, or back to drawdown-ish kind of sort of thing. I'll get to silver in a moment. But anyway, that's just a little sort of my feeling on sort of why you should definitely sort of bank along the way. It's great to hit the home runs and the big wins and think that, okay, you're going to buy this thing, it's never going to come back to that level and yada yada. But, we're trading, we're not investing, and we're looking to make money, day in, day out. So anyway, whatever. Let's get on with the charts. So we saw obviously sort of coming down into this low here, coming into sort of like, Friday. I mean, look at this. This is sort of around US Open, around this point over here. Basically, look, we can just drop this down. We did have this sort of as a little support through here. Sort of, they allowed us to go down, shot it back up. They allowed us to go down, shot it back up. Still, I think you got to hold this sort of resistance up here. This is obviously, again, above that sort of 80 area is where you kind of sort of say, okay, this thing's going to move back up. Top of the range here, sellers came in. We had a bit of a headline that helped sort of push this thing down as well, with sort of China saying that they were thinking about sort of pulling back a little bit of their tariffs against the US. But again, none of this stuff's concrete. And this is what I was saying sort of like through the week as well. You can see in the chart, it's what it represents. The fact that US pulls back a little bit, gold is driving. What drove gold through here is the tariffs. And the unrelenting move to the top side was the fact that they kept escalating, tit for tat, China, US, boom, 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 boom. China pulls off, US pulls off, we come back down. China pulls back, we pull back down. So you can tell that those headlines, any kind of sort of like, cooling off with the sort of tariff, what do you want to call it, debacle, whatever, is going to sort of see the gold cool off a little bit further. And likewise, excuse me, if we see any sort of negative headline, so as in like, oh no, you know what, if they're going to do that, then we're going to do this, and blah, 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 it's going to push back up. But at the main focus of it all, I'm just trying to think of the best word to sort of say with, say with the best of all, I think generally it's moving in the direction of, hey, let's resolve something. I mean, we saw we're going to play hardball. Well, you're going to tariff us. We're going to tariff you. Well, yeah, if you're going to put that on, we're going to make ours higher. And that's what drove us up here. Now you've got US saying, hey, let's cool down. China saying, hey, we're thinking about cooling down too. And that whole sort of flow, like, it seems a bit like they seem to both want to go, okay, look, we're happy to at least talk about this sort of stuff and discuss a way that, basically, as I said throughout the week, they can save face and that they can sort of resolve things out. So unless you get some big backpedal where they say, you know what, we've decided, screw you, tariffs are staying, we'll fight it to the death, which is whatever China said, and we'll fight to the end or something, along through this period here. If you get a headline like that, that justifies this move to go back up here, because it's sort of like, as I said, cooling off, gold's cooling off. China says they'll cool off, we see a cool off. Yes, it moved up, but this is the last couple of hours. It's a little bit of a double bottom kind of thing in this pullback, 38%, still holding here. So look, it's not to sort of say that, gold's going all the way down over here. But the general sort of theme of this whole sort of conflict of trade war, tit for tat kind of stuff seems to have peaked. And they seem to be going, hey, look, you know what? We'll play ball. Yeah, we'll play ball. So you want to see that continued positive kind of sounding tone, tariff stuff to sort of see gold continue to cool off a little bit. I think this move back up here in the here is possibly just to screw out a couple of sort of short positions. It's the end of the week. You've got people that have been short through here. They took profits. I wouldn't put so much stock in the fact that this bounced up just towards the end of the week, that it means that it's going back up to the top up here. I think more sort of it's just end of the week flows, and the fact that people don't want to sort of be held in a position of being short over the weekend when anything could happen and these headlines could pop out. And, as I said, I don't think they're going to be coming out with this kind of thing, but I mean, who can say for sure? Anybody that says for sure is, just lying to themselves, let alone lying to you. But the point is, it's sort of like from a technical standpoint, we know where the buyers are sitting here. So we could say, okay, this was the 38%. This is where we saw the bounce up here. They let it under. They let it under. So let's just put another one through here. Oops, this keeps happening. You've got to click these things twice, each seems. And say, look, this is your, okay, they're letting it down kind of line. Make it a little bit thinner. So 59 to 66, $6-7 range. So let's put an alert on this one. And for now, I'm actually going to call it major support for leg down. And it's not major support. I mean, technically, this will be a major support down over here. But as we can see, with this leg coming down through here, this is the line that you want to take. You take out these sellers here and actually sort of take out the wick of that low. I think that's what's going to open us up and give us this move down here, back to the 61%, which is the retest of these highs before we had this major leg up to the top side here. So I think this is more this last little push up into the end of it. I think this is more just for some profit taking, some people sort of hedging, covering themselves in case anything happens over the weekend. If we have nothing happen over the weekend, I expect this to just resume moving down. That's my sort of feeling of sort of positioning coming into the weekend. Should we sort of see, basically no headlines, or even if we have some sort of positive headlines, particularly positive headlines, I think will give us a gap down. No headlines, I think will keep us keep us fairly flat, and then a move down. And obviously, sort of like if there's any sort of tit for tat sort of stuff, I think that'll sort of move it back up. But I'm not sort of thinking that latter one there. I think this is merely just boom, a setup to push down further, and confirmation will definitely come underneath 3260 ish, 3261, 3260, and I think we've got another $100 move coming down to the lower side there. If we have a quick look just on the daily, see if it gives any more of a sort of bit of a picture, you can see obviously, tried to sort of rally through here, and it's just in this little range thing here, which is pretty much exactly as we said. Look, you could call, whoops, not that one. You could call that this kind of thing, and see that as your breakout box now, if you want to call that on a daily. So let's actually put that on. Let's call this on daily. And I think that's going to be the area that gives us hard direction. As I said, I'm leaning on the idea that we have a bit more of a cooling down. If you look at this on a daily here as well, RSI shows it. RSI sort of looks like it's ready to support a bit of a move back down as well, to sort of come back and retest those highs over there. And sort of structurally, you kind of feel it probably will. Quite interesting actually, because as I said, I don't do Elliott wave, but this is a very sort of clear kind of thing, isn't it? Sort of 1, 2, 3, 4, 5. 1, 2, 3. And that's what, if you look at the videos I did through the week, that's exactly what I was sort of saying, that my belief is with what we have. So I do think we have that one more leg lower down to here. And then for me, it's just clear it out and then sort of recalibrate. Are we buying to sort of move it back up over here? Is that going to be the part of leg one, pullback, support, and then are we going to get this one? Because remember, this will be the important one. This leg here is really going to tell us what we're probably going to expect up until through, I like to say summer, European summer, US summer. But I think this leg here, it will come. Question is it coming from here? Or is it going to come from down here? But regardless of it all, it will come. So if you're trying to sort of short things and sort of hold for, Rockstar or short of the highs of it all, you got to keep in mind there's a good chance you're going to get stopped out when this leg comes up here. Because this leg will come and it's either going to give us a lower high, so this high to that high there, and then we can start working out a sort of bit of more of a continued downtrend channel like this, or it's going to give us a double top, which means then you could be looking at a range, or it's going to go through. Find which one I can use for this. And then we could look at something like this. And that could be, bang, moving right on there. Obviously, the numbers are all over the shop kind of thing with it all. But that is basically what we can expect sort of moving forward. So there's a lot of arrows and crap all over the screen here. But the idea is that we're in this leg, pullback leg here now. We want to determine how deep this is going to come. And when it does come, where's it going to go to after that? How big is this next leg going to be? Because you are going to get that structure play out. So for us at the moment, just want to work out, is this going to come back down here? So we look at the RSI. RSI says, look, yeah, should this thing sort of push down here, there's a good chance that we do sort of come back down here. We've got a structural level where we could see this thing come back, retest here, give the RSI a little bit of time to cool off. So this will be coming back down through here as well, cross, and then move back up as the price sort of comes down, moves up, and then shoots back up over here. But I think we've got to accept the idea that we're up in the 3000s for a bit here. We're not going, in my opinion, look, this thing could break and could come down, back down here. If this undoes this whole move down here, I think it's probably, we're going down lower. But I don't think we're going to get down to sub 3000 without a move up to 3300, 3300 before we move back down there. So I think the way to sort of, well, the way that I'm going to be approaching this is to obviously sort of look for shorts down to this area over here, look for some buys moving up through here with the idea that we could see a greater sell down position be playing out moving forward. But again, that's the bigger view of it all. In the short term, get back onto the sort of daily thing that we're looking at. We watch to see what kind of headlines come out over the weekend. If there is anything positive, then I'd say, okay, it's moving up. But I think this is more just a screw you before we sort of come back down a bit lower. All right, 37 minutes there. I've only done gold, but I have done the news, I suppose. So, okay, let's move along because obviously DXY is going to be a big driver of this thing. Look, this head and shoulders that I've been sort of setting up is in the realm of doing it. And I said, look, this is where I said wherever it was. It must have been around Wednesday, Thursday or so. This is the area that I was interested in. And buyers stepped in beautifully, actually, right on cue. They've moved up over here. I did say, with these things structurally, these head and shoulders moves, you kind of want, well, not you kind of, but generally sort of for it to be a bit more of a confirmed setup of a head and shoulders, the shoulders should be roughly the same size. And as you can see, it's about 3 to 4 days through this area over here. We're at day 3 here. And this is what I was saying in the video on Thursday that, should it come the day, Friday or Monday, the next 2 trading days, that would be perfectly fine. So first things first, buyers stepped in where they need to step in. That's fine. That's a tick. Now we need to see them actually push this thing up. Now, we looked at the data just before and everything was saying, hey, look, you know what? It's not so rosy. And I think that's possibly why we saw a little bit of a heavy push through here. By heavy, I mean it's sort of like it's not flying, it's not a nice easy lift off. It's the price is sort of being weighed down with the expectation that we're going to have a little bit more rubbish US data and no fundamental reason to buy US dollar coming through this week. And I think that shows up in the chart here by the fact that we're seeing these things. We saw the headlines, we saw the China headline as well, and China sort of saying, "Hey, look, you know what? We're not going to sort of tariff you so much either." And this went to bang. This was the candle, 1 o'clock or so that headline came out, and obviously moved up, found resistance on a lower time frame here, back on the 1 hour, found resistance exactly where we've seen the sellers recently, and they pushed it back down. But you are still, in this sense, making higher lows. So again, if you sort of think about these sort of things, this is where the buyers were. Here's the buyers. The buyers have moved up. Double test there. Buyers have moved up. So they are setting up like they want to push it up through here. So as you can see, the buyers are moving up, buyers are moving up. We've got a solid line on a short time frame. Really, that's why I've got the alert up at 140 because that's the main one. But you are seeing that at the moment, the buyers are moving up. And we know sort of like when we've got a solid line, that's where we're sort of saying, okay, this is so you've got sellers there. Okay, yeah, you've got lower ones where they're pushed down here. But realistically, you've got sellers sitting here, and you've got buyers moving up in that direction with the curve, this kind of thing, with the line through there. So that is a bit of an ascending triangle. And a breakthrough 99, 80, whatever, these highs over here is going to see a bit of a push to test this main level here. And this is the thing, sort of like why you got to sort of look at these things on multiple time frames, because they're going to sort of show you that, you got to break these little levels to get to the bigger levels to then get the major breakouts. But you can have early indicators of these things. So should we break up through here? That's the course of action that I'll be looking for. So I think it all starts with that little thing, the first one there, but definitely lower time frame, we're seeing a little bit of a ascending triangle set up through here, where we know where the sellers are. And if price moves through here, there's going to be some stops around here. This is going to shoot us up into this test up over here. Most likely you're not going to get through this on first go, but it does set it up to break there. So from a technical standpoint, you can see that the buyers are moving up. The sellers are holding still, holding flat. They're not real, like, yes, you got these little pushes down, but that's inside the trend. You know what I mean? That's your back and forth to where we're seeing the buyers sort of move up here. Should you break back down, as I said, look, this is your last line of defense of buyers. If this sort of breaks down underneath 98, 98.80, take out that wick down there, that's going to be your fail. Well, major fail, even though technically major fails are lower, but whatever. So that's your area there. You want to see the buyers continually push up and put pressure on these sellers at this level here. So you see a depletion of the sellers at this level here, you move up. You got buyers here, you got buyers here, you got buyers here. So you've got a couple of levels and that sort of moving to the downside. But as you can see, this thing starts to build out into your own little box here. And you can kind of say this is really your breakout box here. And I'd say sort of outside this box here is what's going to give us our sort of more major kind of directions. Actually up here, but probably down here as well. So it's from a technical standpoint, looks like it wants to move higher. It just needs that data to really sort of go, okay, yep, we got the technicals, that's a tick. We got the fundamentals, bang. And you can see this thing break out. And I think if this thing breaks out, look, you're not going to the moon, but I think you're going at least to 102. So that's something that I'm paying attention to there. Move along, we've got Aussie. And Aussie is just fighting and fighting and fighting to try and stay relevant here. Look, it's found resistance on more of this falling resistance, I'd say, rather than this sort of rounded top. I think the rounded top is more just for decorative purposes kind of thing to sort of show that, look, it is sort of rounding over there, opposed to more of like, hey, look, it hit this line and that's the sell. I think. I don't know. I don't do rounded tops generally. It just gives me an idea of it all. But as you can see sellers still moving down, moving down, moving down. Each time it is rallying up. It is rallying up, and it did find support a little bit higher. I thought we would have got to move down to, maybe sort of 63.50s or so before a bit of a push back up. But again, with US dollar sort of getting a little bit sort of wavy into the end of the session, so let's go back, have a look on that on a lower time frame. You can see finding a little bit of a sell down through this period through here. Market's still sort of, not thinking about it. And it reflects in Aussie as they're sort of thinking about it. Well, Aussie's going to move up there a little bit as well. So a lot of Aussie data there kind of looked a little bit, so let's go back onto it very quickly. So Aussie data coming out, CPI, obviously the big one this week. Coming down is not a big tick in the camp of a stronger Aussie. The fact that the quarter on quarter moving up, that is a little bit more in a tick. So a bit of a mix of those two with those ones there. And what else did we had some other Aussie data, didn't we? Trade balance I ticked over throughout. I actually skipped over, sorry, through the week. That's looking to tick up. Not a big mover for the market. Retail sales moving up there a little bit there. So look, a little bit more. I mean, look, retail sales moving up, quarter on quarter. Aussie, where's it gone? Quarter on quarter, CPI moving up, tick, tick. Year on year, more of the headline number moving down, so it's not a tick. So, it's probably flat, but slightly more in a positive direction. Flat, but slightly more in a positive direction of data for Aussie. So it's not enough to sort of say that, hey, hold on, this thing's going down. I would say almost it's probably slightly leaning up. Look, I give these like this is super basic kind of thing of it all, but RBA moving up. I would say that's in the camp of that kind of thing, despite the idea that they are saying they want to sort of cut. The data there sort of goes. Sorry, one sec. The data there sort of goes probably a little bit more in the camp of, they don't need to drastically cut. That's my sort of feeling with it all. So I'd say that's on the smaller sense, so that's RBA, that's moving up there. US dollar, attempting to break out. So I'm going to say that is a bit of a negative. If I was to actually sort of get really sort of a bit more into these, I'd sort of give it a bit more of an angle. It's not saying down, it's probably a diagonal down, whatever. I could build on this idea. China, if we have a look at sort of the yuan, that is still really kind of flat. And again, we're waiting on sort of stuff. The trade data and this kind of stuff. This is actually an interesting sort of thing that I noticed sort of through the session. So not trade data, sorry, but the trade headlines, I should say, puts Aussie in a very tough kind of position because this is the candle where China came out with their sort of the headline sort of saying that, look, we might pull back on the tariffs. Aussie loved it because Aussie loves risk on and, sort of, a pullback on this whole sort of trade war thing, which is directly affecting with China, which is then directly affecting Aussie, is seen as a positive, and market liked it and they bought Aussie up. But where it comes into a bit of conflict with this is that although, yes, China's sort of saying, hey, look, you know what, we're going to pull back on the tariffs, it moves up, that also says to the market, hey, you know what, that's cool. Well, maybe US isn't going to get so smashed either. And this is a bigger influencer on Aussie than China is. So, it's all very well, and that's why we had that knee-jerk reaction. Hey, look, there's going to be sort of a, maybe it's not going to DEFCON 1 or whatever. But the market liked it, bang. But the fact that they love US more than China means that that's great, bang, let's sell into it. And that's what they did. And that's why sort of like, it's all very well that, we're seeing this sort of reduction in the idea of sort of like, the trade war. And that's great for China, and then that's great for Aussie. But the market loves US, and Aussie is a lot more influenced, in my opinion, by the US than China. Hence the three ticks, and the biggest one being the US dollar. So if they start buying the US dollar, it kind of doesn't really matter what the RBA does. It does in the sense of sort of like, if we have these things as conflicting, that, for instance, say they start buying the US dollar, Aussie moves to here. We have hawkish RBA. Aussie still moves in this direction because they're buying the US dollar, but we have a hawkish RBA, so maybe it just goes to here. See what I mean? Like the general direction is still dictated by the US dollar. It's just a little bit mitigated by what the RBA does. But if you have market buying US dollar and then a dovish RBA, then Aussie moves to here. See what I mean? Like it really is dictated by what the US dollar. If they start selling the US dollar, that's great. Aussie moves up here. We have a dovish RBA, moves back here. So all it does is sort of amplify the direction or mitigate the direction of where Aussie may sort of move to. And I think if you trade Aussie, that's a very important sort of thing to understand that. You think, oh yeah, Aussie, boom, it's its own economy. Well, no, actually, we are like sort of like New Zealand, like with their stock exchanges to Australia, is like Australia to the US. You know what I mean? It's just like, oh, what? They've got their own market. Oh, true. Anyway, look, moving on. That's the general idea of all this sort of stuff. So I think any sort of reduction with the trade stuff is going to be, so, and again, you put this China factor into this sort of stuff as well. Look, I know I'm spending a long time on this, but say they buy the US dollar, moves down here. Say we have a hawkish RBA, moves up here. Say China does a little bit more, then you factor that in as well. So if we have a hawkish RBA plus that of China's doing a bit better, it'll move us up and mitigate this move from the US, but the US is still the driver of it all. Okay, enough on these little arrows for now. So moving forward, we've got RBA, I'd say slightly, well, they're saying they want to sort of cut, but I'd say the data sort of probably gives it a little bit of a push up. China, flat because they're just sideways at the moment. They're talking the talk, but not really doing anything, and a potential US dollar rally coming. So to me, it doesn't sort of say that, hey, all guns blazing for a big breakout here at this point. So what I'm sort of looking for is, again, look, we can find a little lower time frame support through this area here. I think underneath, 63.70, we see a bit more of a continued sell down. And then from there, looking at this lows through here at 43, and I think underneath 43, then you've got these higher time frames. So there's quite a few layers, and I suppose this is the whole thing with these rounded tops that, it hasn't been a straight up, straight down. And this is the thing, particularly with all sort of these sort of assets and things that you trade, straight up equals pretty quick straight down. But when you're chopping like this, you can expect it almost, as you can see, a lot of chop over this side, a lot of chop over this side. But should it break underneath here, have a look on the higher time frames, you're starting to see a pretty straight cut along here. So this means that should we break this level over here, I think this will be quite a sharp move down to the 62 level, the buy zone, which is where I'd like to sort of buy it. I don't think we're out of it all, but I do think should this play out, particularly under 63.15, you wouldn't want to be long, and I think you could be looking around this I'll be looking around this 62 level to sort of hammer some shorts down to, and then look to flip to some longs, given, what the situation's looking like at that time. And this is what I mean, that sort of if we see that US dollar push through and get that breakout, well, this is what we're going to see. Aussie is going to sort of move down to these 62s over here. We see a failed rally in DXY then that could be the catalyst for Aussie to do this and go bang, up over here, up around those 65 levels. I do think we are destined to be up over here, but I'm looking for a move down to 62 before we sort of get that move up to the top side over there. All right, so I think that's enough for Aussie at the moment. Look, I'll churn along with some of these ones now. Silver. Actually, I lost one of my charts. Bear with me one sec. All right, found this one. So, look, I was saying sort of on Thursday that this is an area that I was very interested in. 63, 63, so I've got to keep up with the charts. 33, 33. And as you can see, this little support held into close. So again, this is a very crucial area for where you want to sort of, if you're trying to buy silver, we saw this attempt to break out, failed, boom, came down, quite a nice little short through here actually. This is a crucial area for it. Now, silver, flipping back and forth through these charts, if we go back onto this other one here, we can see this is pretty much back to breakout levels. Breakdown levels. And as we know, breakdown levels, retested, completes a move, and there's a good chance that this thing now sees further downside. I have been sort of saying, obviously, through a lot of this stuff that I thought the sell down's coming. It's actually held up a lot better than I thought it would. But I do think that this is going down before it goes up, hence my sort of price targets down here. I think this is the original price target, actually, this one over here. But I wouldn't be surprised if we sort of see 29 again with silver, particularly now that this move was completely undone. Again, as I said earlier, this is why you banked, because I was short from these levels up over here. Holding, I've got the best move ever. Look at this. Look at how much area you would be. I'm so comfortable. I've got all this area. Well, now you got nothing. Good on you. But it gives us another chance to potentially short this thing to come down here a little bit more again. And this is why I said if we get back onto this other chart, what was it? Which chart are we on? You can see that this is a very crucial area. So, we've revisited that breakout level. Can't see it because it's all crap on this chart. But this little channel that we're kind of sort of supporting here, we've got two touches on both sides. It's failed to come up and sort of complete. If this were to be a channel, you would have wanted this to hammer up here. And for a second it did. Like I think I put on one of the days. It had this little sort of ascending triangle or something. I can't remember what it was. It was like a flag or something. It was this kind of move here. I think this move, yeah, something like this. Anyway, maybe it was a bit lower. Maybe it's this one. Regardless, point is, it was saying that, look, it was coming up a little bit higher here. And as you can see, that little ascending, that little sort of triangle break there would have given you very good structure to continue this channel. And, bottom, the top, well, I guess we didn't really go there, but, top, bottom, top, like you want to see highs, lows, bang, bang, touch, 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 touch. So those arrows didn't give it the best, explanation of it. But the idea with it is basically as you're sort of forming these channels, and I guess that bottom joins down there, you want to be going top to bottom, top to bottom, top to bottom. Early indications of a fail of a channel is this, where it fails to go through and complete that structure. So now what we're looking at, if you drag this up through here, not only is a bit of a channel break, but it's also a rising wedge. And rising wedges lead to breakdowns, reversals. So should this thing sort of come down through here, we've got the swing low, which is marked out here at 32 or 32.20 or whatever. And underneath that, I think is going to go back down here. I think this is the crucial area. I think if you break this channel, I sort of take out 32.70. Started a breakdown. I think this is a good short because if we take out that low, it takes us out of this channel, takes us out of this wedge. We've already completed that breakout level. You look at how these things broke down previously. This one's a very small one, but you can see it on the other chart as well. But the candle's still the same. Oh, here, look, take this off. When this broke, it broke down very quickly, bought straight back up, and then the move started. Excuse me. So what we look for with this one here would be a breakdown, a move back up, and this would be the time to then short and look for a bigger move down. That's how I'll play silver. I won't be buying silver at this point. I think I think it's going to do better than gold, but I think it's also going to get smacked. I think, and I'll get on to copper next, and I think metals as a whole, I think have got a little bit of cooling because we've got a very plausible way that we can see gold coming down. We've got silver lining up for a very plausible way for it to come down, and then we've got copper rolling over as well, which I'll get to in a second. But what I'm looking for here is a break of that wick low, 32.75, and then let it play out, buy back up, and then sort of hammer back down. I think that's the play for it all. But yeah, I mean, look, all this is not necessarily negated, but if you move back up, you need to take out this line here. So I'm going to put an alert on this. I'm going to say this is the wedge resistance. And look, if you take that out, then you're looking up for the top side here, which, it can do, because as you can see with this here, if you go, okay, here's I don't use these blue ones so much, more pinpoint. If you look at this as a base here, here's your bottom, here's your top. Well, it went top, top. So in theory, it could go bottom, bottom, before a rally back up to go top up here. So I'd say if you break out past this wedge top, that's what you could be looking for. Move back up. I think that's like, yes, you've got some heavy resistance around these levels, but I think sort of given the big sort of charge up down here, should you get back up to test these levels here, I think this could see higher moves. I'm not a big fan of this. I don't think that's going to happen, but I think it's worth planning for both of those. But for me, I think sort of this downside move is probably more plausible, given the fact that we could probably see US dollar breaking out, given the fact that we could see gold potentially coming down and copper potentially coming down as well. And silver, of course, wears both those hats, industrial hat, and also, sort of a manufacturing metal hat, and also a precious metal hat. So you need the confirmation. We've got 2 touches on the top, 2 touches on the bottom. If you take out this low, that's what I'm looking for. Confirmation down underneath 32. 32, I'm looking down for a move down below 30. All right, kick along. We've got copper. Yeah. So copper's played out, bounced up a little bit higher than I thought. But as you can see, we did have this little sort of support coming up through here. And this is what I was saying on Friday's video, that we were pretty much in this lower high territory. And so we can link these highs together now. What do I do it now? It's a different color, make it blue. We can link these together now and say, okay, you can see sellers are starting to step in here. You've had this great rally up, high, low, high, low, high, low, boom, 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 boom. Sellers have come in earlier. They've said, hey, you know what? Bang, we'll move down. Did have that gap up the top up here, didn't quite get to it. This could still sort of move back up over here, obviously test the underside of this rising support. I use that as a resistance, but I think this is pretty much what we're looking at now. So obviously this has come up a little bit higher, but I think that's the start of this. The fact that we've broken this little move, I think this is going to start to sort of come back down over here. Maybe around to, that was a 38 going the other way, wasn't it? So the green one is for moving up. But yeah, I'd say back down towards this sort of 38. This is the kind of level that I'd be looking for. On the way up through here, we noticed it was very deep pullbacks. I've taken them off now, but these pullbacks through here were just around the 61%, just a little bit less than 61% each time. So I think sort of like targeting, say, 455, I think is a fairly decent little move for copper from here, which is another 6% to the downside here, so 3,000 points or so, which I think, yeah, we could probably sort of see. And again, this is why I think not necessarily that we're going to be breaking back down to the lows over here. It certainly could, but I think there's certainly some cooling off. This has been a great bounce, but I think it's just feeling a little bit tired, as I said on the sort of Friday video, and we got that short sort of enacted coming down through this move over here. And finally, sort of finish off with a bit of China. Not really too much to report on China. This is what I've been looking for, a rally up. It attempted it and boom, knocked down. And when they had that little headline come out, that smacked it down here, which I say smacked it down. It's still very super tight in that. But obviously, you know, if they're going to reduce that kind of stuff, well, the market said, hey, that's all right. Let's buy the yuan. Hence, this chart moved down a little bit. Is that enough to say that, hey, it's all solved? No, we didn't break out. And this is what I mean, that sort of, it's the same thing that's reflected in gold at the moment as well, that, you know, it's moving in this direction, but it's not breaking out. And so I think that it's on with the grind. And as we know with this one, it loves to grind sideways for a bit. So I still think this is the box to sort of show some direction. I think these are the directions that we sort of get moving forward. And I think, as I said, a break up and a rejection from here, lower high, I think that's going to be failed breakout to big breakdowns. Moving down over here to this big rising support. Should that sort of play out? I'm probably more in the camp of this kind of move happening now. A big move up before we move down. But for the time being, I'm only expecting sideways. Hence why that little Aussie chart analysis with the arrows has China just sort of feeding in sideways. All right, cool. That's pretty much it for the charts, and already done the news. So weekend wrap. So we'll see how it goes for the week and that. But I think certainly eyes are going to be on US. You get some strong US data. I think a lot of these metals are going to cool off. Aussie's going to pull back, and we'll sort of see how far that rally goes, possibly up until around 102. And then we sort of see how the market's viewing US at that stage. All right, that's it from me.